In this video, we're going to examine a lot of data to try to determine, is the sell-off done or is it just getting started? Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and Borsog trading. If you're new, a very warm welcome and welcome back KS family. Let's run the numbers. Bitcoin is currently down 9.62% to 2960. Ethereum is down 12.20% to 1622. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. There's a fundamental difference between smart money and retail money. Retail gets caught in an emotional loop, and these emotions breed fear of missing out and fear, uncertainty, and doubt. And there's a lot of FUD in the market at the moment. That's fear, uncertainty, and doubt. To move to the smart money mindset, we want to get rid of this emotional roller coaster. It's very, very damaging to your portfolio, and it's very stressful. I'd like to show this little cartoon because I think it just explains so much. What you see on the trading floor, and it's interesting, it's a trading floor. It's not an investing floor, it's a trading floor because the major flows are trading. And what you see is price comes up and up and up, and retail is incredibly happy. They're going through that roller coaster of emotions, and all of them positive until something like this happens. Now, what do? Do they stay and buy, or do they run? And you know that they run, because that's fear. That's what fear does. Fear makes people leave when the best songs are playing on the dance floor. Notice how price is actually being bid up. How can it be bid up? There's no one there. Smart money is bidding it up. And what do we see? Retail comes back and gets involved and buys at the wrong time, and then will sell at the wrong time as well. Everything I do for you, I want to help you to get into the smart money mindset. One particular emotion that is very, very destructive towards success is impatience. Impatience destroys success. Rule 188. As crypto technical analysts, we are very, very patient. The first thing, we know that we have a financial gun that we want to fire, but we want to hit the target. We don't want a gun that looks like that. We want the bullseyes. Now, how do we do that? To get ready, we do the CTKS method. We mark up our charts. To get ready, we look at outside trends. And to aim, we start to find the market's focus, but we don't finish aiming until we master emotional control. We must get rid of fear. But it's not only fear. Positive excellence will help you aim correctly in life. It will give you a very meaningful and fulfilling and happy existence. Only after we've done all of these stages do we pull the trigger with our buy and sell levels. It takes a lot to actually be profitable in financial markets. And as long-time members of our global family know, unearned is returned. If you get lucky, you can get a lot of money quickly, but you can also lose it really quickly. We're not about that. We're about building sustainable wealth. Before we get into things, we must prime our minds for success and profitability in the market, and we do that through the series of affirmations that are housed in the CTKS Creed. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass, the tax software I use, and you can always directly message me on Twitter at any time, and there are a lot of really good resources in there as well. Rule 225, Bitcoin cannot escape the stock market's gravity. We can see that as the Nasdaq actually pulled back, what happened to Bitcoin? Bitcoin Bitcoin's price action is in this blue line. And you can see Bitcoin's price action across all of these variety of different charts. We believe in looking at the market as crypto technical analysts in a scientific and structured manner. We've seen a disproportionate sell-off in Bitcoin. Now, why do I say it's disproportionate? Having a look at the NASDAQ 100, we can see it actually cut under this support level. It also cut under the resistance level. And what do we see? It came back to around this area. If we just come down here and look at the blue line, it's like, for example, if it was Bitcoin, of course it's not Bitcoin, but if it was Bitcoin, Bitcoin should have retraced to about this red line. Where did it go? All the way down to here. It basically wiped out 60 days of profitability in the crypto market. This is why I always say crypto is volatile. Prepare yourself for the best and worst case scenarios, because reality is likely between them. And the problem is, and we've seen this for a little while, Bitcoin was crossing under support. We were starting to pay a lot of attention to that cross under, because when price loses a support, it's generally on its way to the next support level. And where could that support level be? It could be around the current price, because there is support down here, definitely. There's also potentially this bottom support. But what we need to bear in mind is that we can't just analyze Bitcoin's price action. We have to analyze all the charts that impact Bitcoin's price action as well. And that's what we do as crypto technical analysts. So what are these mythical charts that actually impact Bitcoin's price action? You're looking at 8 of them, and they're really important. What do we actually see here? This is the VIX, or the fear gauge of the stock market. We saw the VIX just spike up a little bit. That spike caused this massive decline in Bitcoin, and also the decline in the major stock market indices. When you see the VIX spiking up, it actually foretells the price can come down further. So what are our expectations with the VIX? VIX, what are you doing? Are you going up? Are you going down? Well, let's look at the probabilities. The VIX has been coming down and down and down and down for quite a long period of time. This is not normal behavior for the VIX. I used to trade the VIX. I love the VIX. Sorry, Kate. Haha, just kidding. But the concept is the VIX has not been doing its normal spiky, crazy action. It's been just coming down and down and down and down and down. And now we've got a little bit of a basing action. VIX starting to get above this resistance level, and we're getting a crossover. This is a cross under, this is a crossover. And it's just basically when price looks like it's going to get above support that was once resistance, or below support, and then that makes it resistance. And what we see with Bitcoin's price, this blue line in the background, it came down really, really hard. It came down and wiped out 60 days of profit. Active learning is a key foundation of our beloved global KS family. And what we do is that we look into things. And what do we see here? When VIX spiked up last time, what did Bitcoin do? It came down pretty hard. Just bear these things in mind. So where could price come down to? When we look at the NASDAQ 100, we've got a very, very strong level of support at 12,847. Now we have to reflect how this could play out on Bitcoin. So how do we do that? What do we basically look at? We can see from the top to the current price on the NASDAQ 100, and these are the NASDAQ 100 futures, it's come down about 3.25%. So if we go to that mythical 12,847 level approximately, we can see it's about halfway there. So what we've seen with the decline in Bitcoin as a relative percentage, we may see double that decline. We would then expect the markets to rally up from this point, either to test this resistance or bypass it. We're all about the smart money mindset, and of course Borsog ANF, we always look if things go against us first, because that is the key thing to do. You want to guard your capital wherever possible, lock in those profits. It's also quite fair to sit outside of the market until things actually consolidate. That is no problem at all. Sitting on cash is a nice thing, especially when the market is going down. You can get in at any time. Let's have a look at bond prices. Bond prices have been falling. This is quite intriguing because bond prices usually rally up because smart money gets out of the market. The stock market throws its money into bonds, but that's not happening. What have we seen happen instead? Safe haven, the US dollar currency index, that's romping away. It actually got through this resistance level at 106.962, and it's actually heading up to the higher one at 109.851. This is telling us that smart money is pulling its money out and sitting on the sidelines. It's just waiting to see what could happen. Now, why would they be doing that? One thing that they look at is the junk bonds. Junk bonds are a risk tolerance measure, and Masterclass students, you'll get all of these charts in TM6, and of course we go through it each day. What you see is junk bonds did a cross under just around here, around August, the 4th of August, and then they did another one around here, and now they've done another one here just recently. This actually says that junk bonds have now officially decayed. They're under resistance. They're under 3 levels of resistance. We would expect them to come back initially to this area. If that doesn't hold, we would expect this area, and if that doesn't hold, we would expect down here. So these are 4 potential price points that you need to keep in your mind. You need to literally hold all of this information in your head, and it does take some time to do, but that's why I go through it every day. The key thing that we really need to look at is what happens with the VIX. We've been waiting for the VIX to spike up. Getting spikes up is very, very normal with the VIX. It's not abnormal, it's absolutely normal. And what have we seen recently? An absolute parabolic run from the major indices with very little, if any, real retracement. If we actually see the major indices coming back to these lower support lines and resuming off, well, that's fantastic. That's just normal, healthy price action. One thing that's very, very interesting, it looks like gold was actually bottoming out yesterday and starting to turn around. We've seen gold come down. Of course, the dollar is strong, but the dollar and gold can move up together and actually do move up together in severe crises when markets rally to the downside, and also bond prices moving up. This is actually quite good because geopolitical risk is a very good proxy for gold. We're not detecting that at the moment. A lot of people are looking for reasons to try to explain this big sell-off. I think it's nothing more than the S&P 500 coming in to seek to test its resistance line. And we can see the S&P 500 is currently 2.77% away from its resistance. We can see the Nasdaq about 0.6% under resistance. We can see the Dow Jones about nearly 1% above resistance. And when we look at the Russell 2000, 2.75% above support. One thing that we actually have seen when we look at Bitcoin compared to inflation expectations, we can see the Fed balance sheet has actually reduced. It is now 8.85 trillion. It was 8.875 trillion. We don't have updates on M1 and M2, but something is concerning. The 5-year and 10-year break-even inflation rates have actually rocketed. That's not so crash hot because we see the Nasdaq coming down. What this actually tells us, and Masterclass students, you'll receive this live chart in TM4. What this tells us is the market is not buying that the Fed is aggressive enough in cutting support to the market and increasing interest rates. One thing that we know, the futures market is actually sending us a signal. The probability of a 75 basis point increase is 42.5%. It was 41% yesterday. So that's decreased the probability of a 50 basis point increase. I would like to thank everybody in our beloved global KS family for reaching out and doing the active learning. I always try to get people to think really deeply about what we're talking about in these videos. Crypto is so incredibly fast moving, you need the understanding, and understanding will make the difference. When we talked yesterday about Fed raising the interest rates and what it meant to the actual economic system, we had so many brilliant answers. Rajat said, when the Fed raises interest rates, it increases the cost of borrowing money, which drains liquidity from the markets, so money flows into low-risk investments like bonds and out of high-risk investments like stocks. Thank you, Rajat. And Jayling said, higher rates make it more difficult to get loans and to make loans, and companies have less cash to spend. And Jade had a really good statement. When interest rates came down to historic lows, money was essentially free to borrow. People buy items, houses, cars, things like that, and they increase demand, which may decrease supply, and car and house prices go up. As interest rates go up, monthly payments on big ticket items becomes unaffordable. And Oscar said, getting credit to expand business becomes more expensive. Wabi Sabi said, the money is now more expensive. It's used as a lever to decrease the effects of inflation. And Grateful Hedge, and thanks for reaching out, Grateful Hedge. True, this usually pushes the markets lower. And Nick said, this puts cost pressure on the economic system by making borrowings more expensive. In turn, less spending causes less money coming into the markets. And John added to that, the cost of borrowing money for businesses increases their costs, thereby reducing profitability and income for shareholders. The cost of credit for consumers increases as well, reducing their capacity to purchase goods, lowering demand, further depressing profitability. Tiana said, because high borrowing prices will reduce spending and investment. Rundle Ridge said, cash gets more expensive. And Edwin added some really good stuff here. The cost of doing everything is higher, spending less, using more dollars to spend. People who are supposed to spend are now spending less, and the money goes into the banks, into fixed deposits. Very good, Edwin. And to Mike and to Brandon, thanks for reaching out and doing that active learning as well. We have such an incredible global KS family. We are a real, non-toxic community where everybody gives their best every day. If you think that our community can help somebody that you know that's not part of the community yet, please reach out and just share a video with them. They'll understand so much more than just investing and trading. They'll gain an understanding of positive excellence, which creates a meaningful and happy life. And there is no toxicity inside our global family. And more importantly, the information that we share each and every day is just like being part of a private trading and investing group. And the perspectives we give on the market are very balanced and backed by statistics. It's often hard to find really good people, but really good people are the foundation of our community. Also, we don't participate in retail thinking. We focus on smart money thinking. Rule 45, we know Bitcoin cannot escape the stock market's gravity, but no alt can escape Bitcoin's gravity either. That's Rule 45. Over the past 24 hours, global crypto market cap has come down 6.82% to 1.02 trillion. The greatest gainers in the past 24 hours, Celsius up 8.8%, TWT up 4.8%, and we can see a lot of stable coins coming up. What does it mean? This is all part of the active learning. What does it mean when stable coins are the greatest gainers in the past 24 hours? The greatest losers in the past 24 hours across the top 100, Anchor down 14.87%, Flow down 12.4%, Ethereum Classic 11.5% down, Clayton 10.9% down, CRO 10.7% down, and EOS 10.6% down. Let's have a look at what Bitcoin is doing, and we can see Bitcoin lost that support and has come down heavily. It's found another level of support at around the 21,000 mark, but we can see and we know the major US indices have not sold off to any real degree. We can see the number of shorts coming into the market, they're spiking up, and also there's been some activity by the longs. They're now starting to buy the dip. The question is this the one and only dip, or do we expect more dips? Please let me know. And what I did previously, when I looked through those 8 charts, I gave you the answer. As a community, we're into borsogging, which is buying on red, selling on green. That's rule 621. When we seek to get on the right side of the percentage, we know that we control the trade or investment, but the market controls the return. First of all, we think, how can this go against us? That's like the red light at the traffic light. Or for example, the second one, what if it goes nowhere? What if it just goes flat? And thirdly, we think about things going for us. What happens if it actually goes in our direction? Borsog is a trading and investing market synchronization technique. We always start with small position sizes because we're seeking to synchronize in with the market. No matter if the market is going up and down, or up or down, if you synchronize in, you can scale and do incredibly well. But if you're desynchronized, it's best to descale and just wait till you can synchronize again. You can make money in any market, but you must be synchronized. Yesterday, we talked about Borsog synchronization. I've just added in another factor. You can see this little guy here. That's how synchronized are you with the market. For example, this synchronization is 75%. That means you're about 3/4 of the way there to synchronizing in with the market. We always ask the question, what is the market doing? Is it going down, going flat, or going up? That's the D, the F, or the U that goes in front of this little Borsog synchronization code. And then we think, what is the probability the price will move against us? And we can give it a specific percentage, and that percentage just goes in there, the A and the 90. The nowhere, the flat, becomes another percentage, and the 4 becomes the last. And how synchronized are we with the market? This is a really important factor to consider. If you're very, very low on synchronization, just step back from the market. There's no problem with cashing out if you wish to. As a trading community, we're always taking profit and seeking to guard that profit as well. If you find yourself not synchronized, you're trying different Borsog opportunities and it's just not working, then you've desynchronized from the market. Sometimes it's best just to sit on your profit and just wait until things become clear again. Over the past 24 hours, there's been 591.96 million in liquidations across nearly 132,000 positions. This is pretty full on in terms of liquidations. And we can see when looking past the last 24-hour period, about 87% of total liquidations were long across the past 24 hours. Across the past 12 hours, 81% long. The past 4 hours, about 88% long. And the past hour, it's gone the other way, 56% short. This is causing that spike up. And Saturdays, for example, on the weekend can be quite optimistic, and we've seen this on a lot of Saturdays. Sundays can be quite pessimistic, so just something to bear in mind. But that's not a law or anything, that's just a probability. Now what we can see is we had a massive amount of long liquidations. The long liquidations were outmatching the short liquidations for quite a while, and we've seen a big spike up in long liquidations just recently. When we look at the last time that occurred, what did price do? Price is this yellow line coming down here. We saw this really high level of liquidation, and that pushed prices down, this long liquidation. But always note that the shorts and the longs are always getting liquidated. In this particular period of time, just what happened recently, we had a majority of long liquidations, very small short liquidations. So this means there's a lot of negative pressure inside the market. A lot of people buy this dip and say, hang on a second, it keeps on dipping. And we saw that it dipped for a number of days since that peak. What do you think will happen here? Do you think it will keep on dipping? Is there any particular evidence that you can draw to support what your conclusion is? I've just zoomed out a little bit on Bitcoin's price action, and we can see Bitcoin trading at $21,000 and approximately $60. Yesterday, we were just here, just before it sold off. You might notice that what actually happened was that it hit that particular support line, wobbled around a little bit, and just dove down to the lower one. There were so many sellers here that it didn't even stop at that support of 21,977. It came down and it wobbled around the 21,375 mark. And what do we see at the moment? Let's sort of zoom out a little bit and try to get a perspective on what could actually occur. And what we've seen here is this kind of pale gray line is the NASDAQ 100. And we can see when the NASDAQ comes down, or goes up in fact, it is a leading indicator of Bitcoin. We saw a little bit of a divergence recently. We saw that Bitcoin was weaker than the NASDAQ, and you can see it playing out there, but it was following the NASDAQ's gravitational bias. Now what we see here, we've had a loss of these support lines. We've been calling this out for quite a few days now, almost nearly, 5 days. And we saw another loss of a support line just around here about 4 days ago. So for these, when you get a cross under, you've got to be really, really careful, especially with crypto. Cross unders are very, very important to understand. It's just a break in a support line. If we look at this particular price action, looking at the support from here through there, and we could even just get a little bit more support in there. We saw a cross under in price, then a rally, then a break, then a rally, then a break. So we could actually draw another support line through here. I'm not caring about what's happening over there. I'm looking at this particular level from around where we drew that to this major support through here, another cross under. This is always a signal to be careful. And the other thing works as well. When you look across overs, so for example, price is rallying, stop because all this resistance. Now it got over. That is a confirmed crossover. That is the time to get in. Does it mean if you get a cross under, you have to layer your 10-5-10 levels all the way down? Not necessarily. If you're in a bull market, in a positive environment for positive price potential, you would set 10-5-10 levels, absolutely. But we're in a negative market. The sentiment has turned quite sour of late. So there's no actual need to get in and lower and try to pick up Borsog levels just at the moment. Now, why do I say that? Because when I look at how price came down so dramatically, it crossed through this level of resistance, crossed through this. We can see cross unders are occurring all over the place. The next real major level of support, for example, is around this 19,925 mark and this around 18,963 mark. If we start to lose this particular support, that could be quite problematic because there's not a lot of support underneath here, which means that we could get a cascading sell-off like this. If we do get something like that, they're the things that dreams are made of. That's not something that we run away from. That's something that we look forward to with all our heart to see. And you might be saying, Ken, are you a nut? What are you talking about? Because when price comes down like this, what we just saw, everybody is fleeing. The smart money will push it up. And what we know, if something was $10 and it came down to $5, that's a 50% decrease. But if it goes back up to $10, that's a 100% increase. And this is what happens all the time in markets. You've got this 10, 5, 10, 5, 10 kind of thing happening all the time. That's why I have no fear if price comes down even more than these bottoms. It would be an absolute gift. That's why I wanted to share Rule 188 with you. Impatience destroys success. Success in anything requires patience. We've noted that the VIX hasn't even started to spike. It's just literally getting above a resistance level. The major indices have come down very, very little, but Bitcoin has been very, very violently sold off. If that is the case, we could expect more follow through, but always have your ANF. We're thinking that price has a probability to go against us, and as a community we go long. To make it really easy, you can make incredible gains by going long. For example, if we're looking at this current price action and say we're about here at the moment, we've just seen price come catastrophically down, we could get a bit of a blip up. And if we keep on staying under resistance, we know these blips aren't doing anything for us. We want to actually get some consolidation in price before we know that things are good to get into. Of course, more experienced Borsoggers will be actually trading these tails up and down. But if you're just getting into Borsogging, don't try to do that. Don't worry about buying the bottom. That's not important at all. What's important is getting into a profitable trade when it's time. And what I've done here, I've just drawn about a 35% reduction from there down to the bottom. But if we take that bottom up to this particular top, it's a 40.71% increase. Just because it comes down hard doesn't mean you can't profit when it comes back up. In fact, you can. And that's what we live for, is to get on the right side of the percentage. So we saw yesterday the price basically collapsed down. Now we're here. Where do you think price is going from here? What particular price? Do you think it will hit support or the lower support? Or do you think it will rebound and rally again? All things are possible with crypto and Bitcoin. That's why you must ANF. You just think, if it goes against me, how am I covering my positions? I'm not talking about going short. Just use spot and go long until you know what you're doing. And when you're consistently profitable, you can do anything you want. No drama. But learning with spot is a very, very good idea. And what will you do if price comes down and keeps going, or price comes down and actually dog legs back up? And this can happen many, many times. Price can come down. But what we've seen here is a very big cascading liquidation of longs. If we look into this price action, you can see that just literally, it just dropped off the wall. Dropped off the wall? Came down the wall. And when we look at this dropping off the wall, it doesn't occur that many times. See, you've got gradual dropping off the wall here. You've got a drop off the wall, and then you've got a confirmed break. Now you've got to be careful about these unsustainable spikes. Generally, when you have a crossover, the first one is generally a bit of a fake because it's trying to push the momentum to the upside, and it generally fails. So things tend to come down, but when you can get into it really, really well, these things are incredibly profitable. You can see how incredibly emotional trading and investing can be. That's why we have Rule 774, master yourself to master the market. As a community, our foundation is positive excellence, which gives us sustainable fulfillment, meaning happiness and success. We understand success is a journey. Success is something that you actually work towards, and you can only support success by your own positive excellence character. Or else it's just easy come, easy go, and we don't want that. And I would just like to thank everybody for their amazing comments, such beautiful active learning. Yesterday, we noted our Borsog synchronization level. What is it today? And you've got another synchronization factor on that. And of course, these synchronization factors are all different for everyone. It depends where you're placing your orders. It's uniquely personal. And the thing to note, your factor will not be another person's factor. It just helps you get into synchronization with the market, and that's the most important thing that you can ever do. Yesterday, I said I would do Solana, and I've kept my promise, of course. And what we're looking at, these particular levels are joined in from the CTKS method. The key also is these are not static levels. They will change around with price, but not as you may think. And for the masterclass students, this is all about confluence. I just want to give you some key levels on Solana. You can see Solana's key levels here. And what we can do, if you find yourself with overlapping levels like this, you can just go to labels and say no overlapping labels, and you can see that it all becomes non-overlapping. It's really good. So what we see, you can see that there's two types of Stanfield levels, and this is all about the confluence of your CTKS lines. This one here at $33.49 and $33, you can see that they're quite strong, and the other ones are a little bit lighter. Really strong levels are multiple confluences of lines through the CTKS method. Another thing that I've done, I've used an index. I've used basically the TradingView index of Solana USD. They always mirror and pair each other. This basically means if you're trading USDT, USDC or BUSD against Solana and say not USD, they'll all likely coincide. And when I say likely, you may get some variances because some tokens, some cryptos have better liquidity than others, but this is the master of the liquidity. So what we can see through these levels, we had a cutting of the 40.54 and it came down, just wobbled around. Maybe I'll just zoom in here a little bit for you. And we can see that it came down to this specific level, wobbled around a bit, and then lost it, came back up. Now what we actually notice is the 33.49 and 33 are both very strong. That's why the price didn't actually come all the way down. Buyers were stepping in around this local low, and it's really important to understand local lows and local highs are not the only thing professional traders and investors look at. They look at just about everything. Let's just get a bit of a perspective on Solana. If we look at this support, we can see that's a cut through here. If we look at this secondary level of support, we see a cut through here. When we actually look at a very tight resistance line coming through here, we can see we're still under resistance. But what if we drop from the current price to around 33 and just rallied up just in a quick whip? You can see all of these tails. They're quite often, they happen a lot. And what could we be looking at there? About a 14.26% return. What if it didn't go back that far? What if it only came sort of back up to around the current price? That'd be an 11%, but buying it from around the $33 mark. You can be on the wrong side of the trade and on the right side of the percentage and make really, really good returns. This is why you can make returns no matter what the market is doing. But again, there's absolutely no pressure in any of this. If you feel desynchronized from the market, don't jump in with both feet, because it's not a good idea. You need to be synchronized. Just start small with coffee money. Check your synchronization levels, boost it up as high as you can get, and then go for it. Fear can be a major problem to every trader and investor. People see price coming down like this and they say, oh, it can go lower, and then it turns around. We've got clear-cut overs, but people still stay on the sidelines because they say it's too risky. I don't want to get in. It could go down again. And you want to be just aware of those fears, and you can use your synchronization of coffee money to do so. For many reasons, I think we can expect to see a bit of a short-term bounce no matter what happens at around the $33 level. It's really good to always build in your ANF strategy. For example, what happened if the entire crypto market and indeed the stock market started to rally again? You have to put that story on your radar as well. What if everything comes up? That is fair. That could happen. So what we do is our three-dimensional thinking. We always think, what if price goes against us, goes nowhere, or goes for us? And we have strategies across all of those things. Please let me know your Borsog synchronization code for today. It's really good just to do it every day automatically. We know no alt can escape Bitcoin's gravity, and what have we seen with Ethereum? As Bitcoin came down, it dragged Ethereum down with it. And what about Binance Coin, BNB? The same, dragged it with it. And what about ADA? Dragged it with it, and how? ADA showed a lot of weakness, and I've been hearing reports of the ADA testnet having problems. Often you can see the news before the news by how price actually works. We can see XRP is very much in alignment with Bitcoin's gravity. That's very different from BNB. Binance Coin is so much stronger, ETH is stronger, but XRP is aligned. And what do we see with Solana? It's a little bit stronger than Bitcoin's gravity. And what about Doge? Doge spiked up just as Bitcoin was starting to fall. But it can't escape Bitcoin's gravity. And what happened? It got pulled down with it. What about DOT? Got pulled down with Bitcoin's gravity. And have a look at SHIB. It's also getting pulled down with Bitcoin's gravity, but it rallied with Doge. Very, very interesting behavior from the memes. And if people have been looking into the social sector, that's been really interesting too. One of the issues with the socials, they're quite light in terms of volume. So if you have a if you have a massive trading and investing account, you'll take up all the liquidity in one or two positions easily. But having said that, they're very good for borsogging and getting into the market structure. For the masterclass students, I'd recommend looking at LV11 again, LV12, LV14 and LV21. They'll really help you out right now. If you think our community can help your friends and family, please urge them to have a look at a video. They'll understand so much about financial markets, the world that they live in, and also it will give them so many skills in which to become financially abundant. And don't forget, we know that we control the trade or investment, but the market controls the return. So it's all about just taking the patience, understanding that we sometimes sit on the sidelines until things are clearer. And if you want to get into an incredibly positive community, be surrounded by wonderful, excellent people, you can't go past our community. The people here are just amazing. And if you've been quietly watching from the wings, it's a fantastic idea to just put your Borsog synchronization factor down, because you'll find it incredibly valuable over time. And thanks to everybody who reached out for the first time. Just beautiful to see you. Please consider sharing and liking this video and also subscribing to the channel. We would love to have you as a part of our globally extended KS family. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for assisting masterclass students. And of course, a very big thank you to you for watching and for being part of our global family. I've left helpful links in the description of this video, such as the tax software I use, and also links to the CryptoTradingKS Masterclass. Please seek out an ambassador to get 80% off, and if you're in financial hardship, you can also apply for the partial scholarship. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.